So with that, I thought we can have a look at gold first. And for those of you who were on last week's session, in fact, I just retweeted the update from that in case any of you missed that. Last week, we talked about gold, the potential for it to retrace back towards 1,185 US dollars per ounce. So this time last week, that is what we discussed. We said that that was the likely level for a projected pullback at this point in time, that gold was overdue a pullback. And that's the level that we're looking at. If you have a look right now at the chart of gold, it has indeed pulled back spot on to 1,185 US dollars per ounce. It's finding support at the moment, right at the monthly pivot and also at the 21-day moving average. So we pull back to that zone, a bit like a price going towards a magnet in this sense that the key moving averages, major levels of support and resistance, the price will gravitate towards. Once it breaks through a level of support, it will have clean air until it gets to that next level, which is exactly what we've seen. And that's why we've been projecting a level to be reached at 1185. That was the next real key zone of support here for gold. Now, for those of you who've been following our weekly reports for a while now, either via FX Street or our own newsletters and our own YouTube channel, you'll be aware now that we have capitalized on the breakout from the January effect at the beginning of the year. We've banked 700 points on this breakout over the last 3.5 weeks. In fact, on Monday, we saw gold breach and close up to 2-month highs, but subsequently it's had a failed move at 1,119 US dollars per ounce. It's rolled over from that level, broke through a trend line. Just yesterday, the close yesterday was an important signal. We had a break and a close below the previous day's low, major trend zone as well that was holding gold up during this entire rally. And also, if we go over to the weekly chart, where we've continued to see gains over 4 weeks, higher highs, higher lows. Now you can see this week we have taken out last week's low. We've also just about breached above last week's high, only to see a bull trap, and we've seen a reversal in price, which is very typical for the gold market. So the way that we're breaking down right now, we are coming to the first level of support. So this will be the first level for gold to hold in terms of the overall price structure for the bulls here. We've come down, had a decisive test of the 21-day moving average, underlying support, and 1185, we're getting a bounce off that level right now. We've had 3 days now of lower lows, lower highs. Looks like we're likely to get a lower close today, but we'll see how the price action continues. I would look at the potential for gold to either consolidate around this zone or some additional weakness here. 1185, it's hit quite quickly following on from yesterday's bearish close back around the 1200 zone. So it's broken down another 150 points. And I would be looking at the next major retracement levels here at approximately 1,175 US dollars. So if we do get another wave of selling here with gold, I would look at that level, and then I would be looking towards a potential consolidation in price. We've got next week the FOMC statement on Wednesday. Next Friday we've got non-farm payrolls. Certainly short-term momentum is to the downside. We've seen the Dow Jones breaking above that important 20,000 level, so we've seen a lot of follow through on that just yesterday. That's also sparked a liquidation in positions for gold here, as we've seen now this breakdown in price just overnight. So for me, gold right now, we've come out of the position at the right time to bank our profits on the trade. There has been an opportunity short term to just capitalize on the sell short, taking it from 1200 back to 1185. Now is going to be an important area to see how gold reacts to this level, whether it consolidates, whether it breaks down any lower here, whether it gets a retest of the 50-day moving average, which is currently sitting at 1,177 US dollars per ounce. So we could even get a retest of that level. If we do break that zone, I'll be looking around the 1175 as the next major level here to keep an eye on. Now, certainly on a weekly closing basis, I would also watch this into tomorrow's close as well, because if we do close below the previous week's low and we are starting a shorter term, larger corrective pullback, it is something to bear in mind on the chart that we do have, of course, a lower high on the chart, lower low, and it is worth bearing in mind that that could be the end of the January effect. In fact, the January effect, really, it's coming towards the end of where you would expect the seasonal cycle to follow through to, being in the last week now, coming into the last week of January approximately. I think next week will be into Wednesday, will be the 1st of February. So we are coming towards the end of this rally. So well done for those of you who've capitalized on this position.